Good morning once again, and welcome to the Haven Financial Group radio show. I'm Larry Kalvig, founder and CEO of the Haven Financial Group, celebrating 10 years of business here in the metro area. 10 years. I don't know how that time went by so quickly, but you know, we have Kyle Thomas, certified financial planner on our Haven investment team, assisting us with this show and talking about, you know, retirement topics, inflation and interest rates, because it just continues. It will always continue. And how does it affect you? And do you know how it affects you? If you don't, I encourage you to call 612-504-8400. Come on in for a complimentary consultation. We'll discuss everything about retirement, and we'll take notes and listen. And you may find something out that you simply didn't even know, nor nobody even asked you. And just that in itself might be something that could be very valuable as you plan for retirement.
Certainly take a lot of the stress away if someone just asks you a few questions. That is for certain.
Right.
Kyle is with us. And Kyle, we've been talking about the Federal Reserve and lowering interest rates. And as we have said over and over here, you know, we've seen 2 interest rate drops and a third could be on the way. We've talked about some of the decisions that you need to make as they relate to your retirement in these times as interest rates come down and the impact interest rates might have on your retirement planning. But let's talk about some of the mistakes that you want to try to avoid as we are in this decreasing rate time, you know, as you're changing. So we've talked about the idea that people may be making some changes. This is an actionable time. So as they make those changes, what are some of the things that they want to avoid?
Yeah, a really big one that, you know, we take into consideration that separates us, I believe, is not factoring in taxes. So we absolutely factor in taxes on every single transaction that we make. If you're going to reallocate, sell some stocks and buy some bonds, well, how much of a capital gain are you going to take from those stocks that you're selling? And then what account are you buying those bonds in? Because the bonds are going to have interest that's going to be taxable. So are you going to put that in a tax-deferred account, a tax-free account, or a taxable account? We want to make sure that we're watching all of those, because that can majorly impact your taxes, you know, and especially if you have to realize money at capital gains rates versus ordinary income tax rates. So that is a really big one that is not typically thought of, and it can change your tax picture. Another one is chasing yield. So you don't want to just necessarily throw a bunch of money into these higher yields right now if it doesn't, you know, warrant it for your risk profile. You know, you always want to stay long-term approach minded, because keep in mind, when these rates get lowered, stocks tend to do well in that time as well. So you don't want to overextend yourself in either direction with stocks or bonds, or even cash for that matter, because, you know, cash can, having too much cash on the sidelines can hurt you either way. You know, we always want you to have that emergency fund that Larry was talking about, you know, 50 to 100 grand just on the sidelines, because you never know if you need to replace your roof or get a new car. You know, life happens, and we see it on a weekly basis that, you know, people need access to that. So that's almost more important than any of this other stuff, is to have that kind of emergency fund on the sideline. But you don't want to over allocate to that cash, because you're actually going to be losing on that cash. You know, if inflation is 2.5% or 3% and you're in cash, well, that piece you're actually losing your negative whatever inflation is, because you didn't gain anything on that. So there's definitely a lot of things to keep in mind, and you know, that's why I was saying, you know, it's really nice to have a partner to talk through with this stuff, because there's a lot of details that go into it.
Well, I think that, you know, as we watch these interest rates fluctuate and all the different things that have been happening, the uncertainty in the economy, people get a little overwhelmed. And I feel confident there are a lot of people out there who have just said they're pulling their money out of everything and going to stand by and wait. And that you've just said is not a real smart way to go about this. There are other ways to go so that your money continues to work for you. Let's talk about some of the tools out there that exist that you do not want to avoid, like concentrating your investments in a single asset class or tool that used to provide what they needed. Sometimes people will maybe not do that, right?
Yeah, there is, especially with these last few years, a lot of people that we're seeing with an over allocation to large cap U.S. stocks.
Mm-hmm.
Well, partially because that's been the area that's done well in the stock market. So naturally, their account is going to be overweight to those specific areas. But also, people tend to chase the bull. And that's where the bull has been with the U.S. large cap stocks. And, that's why you want to stay diversified, because a lot of times people can get into it too late. And then the market shifts and it's a different type of asset class that's in favor. Right. Large growth has been the one that's been in favor the last couple of years. But one thing I'll say is large value actually outpaces large growth historically. Right. So, that make sure that we're not over allocated to large growth, because that's all the big names that you hear about, the Magnificent Seven. Those are all large growth. There's a lot of great large value companies out there, and they also, present dividends and stability with their financials, right? So keep that in mind and make sure that we're diversified to small caps and international and emerging markets and all these different things, and that we're diversified in bonds too. A lot of people only think that there's one kind of bond, really, and there's many different types of bonds. There's intermediate bonds, there's short-term bonds, there's treasury bonds, inflation-protected bonds, so that match the inflation numbers there. So we can diversify in everywhere, and it's important to do that because all these different categories have been the best category in any given year. And we have charts that show that. So that's why it's important to diversify, because we have no idea when those years are going to come.
So I think we've learned today that as the interest rates come down and there's some fluctuation in inflation and the economy is continuing to stabilize, this can be a time to take advantage. This can be an opportunity for retirees to maybe make some changes, rebalance, if you will, if you have a partner to do it with.
Yeah. What I'll say is all these retirement puzzle pieces, I say it every week. We talk about it every week. Yes, we talk about interest rates and inflation, and yes, they affect our lives and our money, and they always have, they always will. Being in the right place, having a plan, and all these retirement puzzle pieces. If you're listening, do you have the right risk tolerance? Do you have the right portfolio? Does it match what you really should be doing at this point in your portfolio? Income planning, tax prep, tax preparation, having somebody that you're just not dropping off and picking up, Social Security timing strategies, having that discussion, making an educated decision. Do you have a trust, will, powers of attorney, the estate planning things that will protect us while we're living and also when we're gone for the legacy of your family and the kids and whomever's important to you, charities, et cetera. Long-term care, life insurance reviews. It's annual enrollment. It's open enrollment, Medicare, that Advantage, the supplement, Isabella and Glenn at the office. If this sounds overwhelming, and it can be, that's where you should have a partner, because there are major costs involving making the wrong decisions or even the right ones at the wrong times. And you could even make such mistakes even when you grasp the bigger picture. So give us a call for some clarity, for some understanding, for a partner. We are only a phone call away, 612-504-8400 or havenfinancialgroup.com. We'd love to visit more with you. I know retirement can be complicated, but our job is to simplify and help people, and we're honored to have done that for 10 years.
All right. Again, that number is 612-504-8400. Give Haven Financial Group a call today. Set up an appointment. Go in. Tell them you heard us here on the radio and you would like to talk about your retirement. Kyle Thomas, thank you so very much for being a part of the show today.
Thank you so much. It was great to be here.
All right. And Larry,
Jim, great to
thanks.
be with you.
You too.